Good day, everyone. Today, our group will be presenting a financial analysis of two public listed companies in Malaysia's food manufacturing industry, which are Oriental Food Industry Holding Berhad, also known as OFI, and Rex Industry Berhad. So, these are my group members. Let's jump into the introduction.
In this presentation, we analyze and compare the financial performance of OFI and Rex Industry over 3 financial years from 2022 to 2024 using various financial ratio. We select OFI and Rex Industry because both operate within the same food manufacturing industry but focus on different product segments. OFI mainly products snacks food such as biscuit and wafers, while Rex Industry focus on canned food and beverage. This makes them suitable for comparison to understand how different business strategy affect financial performance. The main object of this study are to analyze the financial performance of both companies, calculate important financial ratios, and compare their strength and weakness. Based on the findings, our group also provide recommendation to improve performance and suggest suitable sources of funds for future expansion.
Good day. Today I'm introducing ETA Group Berhad, a powerhouse in the halal food and beverage sector. Listed on Bursa Malaysia under code 9946, you may previously have known them as a Rex Industry Berhad. It's founded in 1965. The company has grown from a small food processor into a global player. Just recently in December 2025, it underwent a major rebranding following its acquisition by ETA Industries. What makes ETA Group stand out is efficiency. Between 2023 and 2025, they underwent a massive restructuring and closing their legacy Penang plant to centralize all Malaysian operations at a high-tech hub in Batu Pahat, Johor. They operate on high-volume, cost-sensitive model. This means they focus on providing quality, affordable halal product to the masses. Their portfolio is split into 3 main pillars. One is canned foods, beverages, and convenience like model ready-to-eat meals and snacks. Their footprint is truly international. While they dominate Malaysia retail and e-commerce platform like Shopee and Lazada, they are also a massive B2B and OEM partner for global supermarket chains. Beyond Malaysia, they have a strategic plant in East Java, Indonesia, which serves a dedicated export hub for seafood to the US and European market. With certification like HACCP, US FDA, and Halal, they are key supplier to the Middle East, Africa, and the broader Asian region. In short, ETA Group Berhad is no longer just a canning company. By streamlining their operations and leveraging to ETA brand, they have positioned themselves as a lean, globally certified leader in affordable halal food space. Thank you.
Hi everyone, please allow me to explain the ratio analysis for both OFI and REX industry company. So to make sure that the company is doing better in terms of financial, we make sure that the main 4 ratios are being analyzed, which is liquidity, is to make sure that the company can pay off the short-term debts. The second is the capital structure, where it is the debt and the equity of the company is balanced. We make sure that the debt is not higher and the equity is not lower. The third is the asset management efficiency, is to make sure that the company can effectively generate their asset into revenue. And the lastly is profitability, where we make sure that the company has the full capacity to convert sales into net earnings. Thank you. So from the two tables above, we can see that OFI has been doing better from 2022 to 2024. They have been, for example, I can show is that the current ratio for 2022 it has been 3.31, but they managed to make it 3.75 in 2024. And as you can see, all the numbers are higher in the 2024. So it means that they have been doing better in terms of generating their sales into revenues and many more. Thank you. So now we have derived all the data from the table into the graph to make sure that the investors, shareholders, and also the end customers they get to see OFI's finance performance even better. For example, for the net profit margin, we can see that from the graph that from 2022 it has shown a very good rising from 6.30 percentages to 10 percentages in 2024, which means they have improved their cost efficiency, and they also make sure that they get to generate their sales into profit so that they get to sustain in the market for a very long time. Thank you.
The liquidity position of Rex Industry Berhad went down in 2023 but improved strongly in 2024. Both the current radio and quick radio decreased in 2023 but then increased in 2024, showing that the company's short-term financial position is now much stronger. For example, the quick radio dropped from 0.83 in 2022 to 0.77 in 2023 but then rose to 1.08 in 2024. This shows that the company at first had some financial pressure but later recovered and become more stable. Thank you. Hi, overall, the company's performance went down in 2023 but improved in 2024. Most of the financial results become weaker in 2023 but they have become better again in 2024. This shows that Rex Industry Berhad is now is better financial condition. For example, the current radio went down from 1.79 in 2022 to 1.67 in 2023, but then it increased to 2.04 in 2024. This clearly shows that the company's financial position become weaker at first, but then become stronger again. Thank you.
I continue the comparison between OFI and REX. This section compares the financial performance of Oriental Food Industries and REX Industry from 2022 to 2024. Although both operate in the food manufacturing industry, the different product focus leads to different financial outcomes. The comparison is based on profitability, liquidity, efficiency, and solvency. In terms of profitability, OFI clearly outperforms REX Industry. OFI records stable revenue growth with strong growth and net profit margins, showing effective cost control and strong market demand. REC Industry, however, faced weaker and more unstable profitability due to higher operating costs and lower efficiency, which result in lower return to shareholders. Looking at liquidity and efficiency, OFI maintains strong current and quick ratio, allowing it to meet short-term obligations comfortably. OFI also shows better efficiency through higher inventory and asset turnover ratios. In contrast, REC Industry experienced weaker liquidity and slower inventory movement, which tie up cash and affect operational performance. From a solvency perspective, OFI has a healthier capital structure with lower debt and financial risks. REX Industry carries higher leverage, making it more vulnerable during periods and weak profitability. Overall, OFI demonstrates stronger financial performance across all key areas, while REX Industry require improvement in cost control, efficiency, and financial management.
Now I will be continue with the recommendation part. Based on the financial analysis, different recommendations are proposed for each company. For Oriental Food Industry, the company should continue strengthening its export market by expanding distribution channels and entering new regional markets. OFI also can invest in automation and production technology to further improve efficiency and maintain its strong profit margins. In addition, product innovation such as healthier snack options can help stay competitive and attract new customers. For REX industry, the company should focus on improving cost control and operational efficiency. Better innovation management such as reducing slow-moving stock and improving demand forecasting can help release tied-up cash. REX should also enhance marketing strategies and product positioning to rebuild demand and improve profitability.
Now I will be continuing with expansion and sources of funds. If the company plans to expand their businesses, suitable sources of funds must be considered. For OFI, internal financing such as retained earnings is the most suitable sources due to its strong profitability and cash position. This allows expansion with lower financial risk. OFI also consider moderate bank borrowings if needed, as it has a strong balance sheet. For REX industry, expansion should be approached more cautiously. Short-term bank loans or restructuring existing borrowings may be more suitable. REX should focus on stabilizing operation and improving cash flow before taking on large-scale expansion to avoid increasing financial risk.
To conclude, based on financial analysis conducted for the year 2022 to 2024, Oriental food industry shows stronger overall financial performance compared to REX industry. OFI demonstrates higher profitability, stronger liquidity and better efficiency in managing its assets and operations. This indicates a stable business model and effective management. On the other hand, REX industry faces several financial challenges, including lower profitability and weaker efficiency, which suggests the need for better cost control, inventory management, and strategic restructuring. In summary, while both companies operate in the same industry, their financial performance differs significantly due to differences in business strategy and operational efficiency. So that's all from us. Thank you.